everyone. I'm David Rose with USXP. Welcome to the Scaling Stateside podcast. Along with my co-host and co-founder, Matt Oxley, we are on a mission to help founders from UK and European venture-backed tech companies better understand the US expansion process and the US venture fundraising process. And with that, we're having a series of conversations with founders who've already made the expansion journey to the US and with VC partners who are funding U.S. expansion for the portfolio company. And today, we're very excited to have with us Matt Wichrowski from Fly Ventures. As part of our conversation, Matt, please introduce yourself and tell us where in the world you are today.
Sure. Hi, everyone. Very nice to be here. My name is Matt. I'm one of the three partners of Fly Ventures, which is a first-check VC built for technical founders that other funds are afraid to back. And that's sort of our primary focus. I'm calling today from California, where my home base is, but I do split time between the West Coast and the UK, mostly London, with a little bit of smattering across Europe, which I'm sure we'll get to. Yeah.
All right. And one thing we always like to ask, Matt, what was your first paying job? We're going way back to the beginning.
Yeah, the first one I was able to think of, which, I mean, I don't know if it was a job as much as a side hustle, but I was 11 or something. I started like a car detailing business or something. I mean, business is loose. It was, going around and, you clean up stuff, and it was extremely unscalable, obviously, but I was also...
That's a real hustle. That's a lot of work.
Yeah, it was a hustle. For sure.
Love it.
Dude, I love that. I love getting everybody's answers, because everybody that we tend to interview is a hustler. And you can tell that they're starting off at like 10, 11 is the years that they start.
Yeah, that's when you start to you get a little, I want to be spending money.
All right, okay, this thing called money, I can actually put it to use and make bad decisions. That's cool. That's awesome. Yeah, there's definitely a trend there. So Matt, what I'd love to do, obviously you've alluded that you split your time, because I'm sorry, but I sleuthed you. It's Chicago to London Business School, then Entrepreneur First, and then Boston, and now obviously you're West Coast, but you're splitting your time. Right. What was the first draw? What was that first moment? Obviously it was London Business School, but then from a kind of professional venture perspective, what drew you back? Can you talk us through that kind of...
Back to the States?
No, back to London, whether you stayed there, but also what took you to this transatlantic kind of role and position you've got?
So as you alluded to, I grew up in Chicago, or the burbs, and after college or uni, or depending on who's listening, I spent time in Chicago properly. As part of that role, which we can get into, I did the consulting thing specifically. Sort of my focus was international supply chain, strategic sourcing, procurement, et cetera. So that brought me around the world quite a bit. It was in a very different time, very pro-globalization, which is possibly dating me, but nevertheless. But kind of after a stint, I realized that wasn't the career path for me. I wanted to make a transition, and I had discovered venture. We could talk about that more specifically if that's of interest, but suffice to say, I kind of I found this asset class that I hadn't previously been super familiar with. I studied finance in undergrad, and I was drawn to alternative assets at the time, but in the Midwest, that's, private equity and real estate, which didn't exactly entice me as a career path. And so I went the way I did. But as I was sort of thinking what's next, because I didn't think consulting was the right path forward, I came across venture. I think there was a lot of different things. And I wish I wrote down the discovery process, but I didn't. But certainly, the writing of Brad Feld and Mark Suster and Fred Wilson, and it was the rise, or the start, I should say, of Andreessen Horowitz. And anyway, I just kind of fell in love with this asset class. And I still am pretty proud to say I did. So I knew I wanted to kind of transition careers, and I decided to use grad school as a catalyst for that. I knew I wanted to go into venture. And I knew I also wanted to get out of the States for a while. I wanted to, I had kind of gotten this taste of international business and just sort of seeing different cultures. And the US has a lot of amazing attributes, but it is quite insular. And that's probably even more true in the Midwest. So I knew I wanted to kind of have a stint outside. So when you factor in, like, you want to go to grad school, you want to get into venture, and you want to be international, and a school that kind of is worth the investment, frankly, it's not a huge list, to be honest with you. So that brought me to London, and that's what brought me over in 2014. And since, I've had a foot, if not both feet, in European tech ever since. The brief stint that I did in Boston was just because my wife had gotten to grad school for writing, different career. So we obviously went together, and we stayed there for, it was like 18, 20 months or so. But I was still working for EF, and I was still doing that back and forth. And then back to London, and now US again.
One of the things, again, I was sleuthing you and loving doing that, admittedly. And one of the kind of captions, I'm just going to read it out, that you say in your bio is, I've worked in the UK/EU startup ecosystem since 2015, and I've seen firsthand how European founders are held back by the scale and ambition of local capital, which is why you split your team. I just wondered if you could unpack that, because I think we hear this a lot. So I just, from your perspective, just wondered if you could unpack that.
Yeah, it's definitely been a very consistent aspect of my venture career. At EF, I experienced it in a different capacity. Now I fly, I've gone to realize it is more complex than just as simple as, like, investors aren't as ambitious, but nevertheless, it is true. And to be honest, this is actually this is what Fly got started on, in 2016. I joined in 2020, which we could talk about that too. But the kind of fundamental premise for why the fund started was this perceived and very real gap between the talent and the caliber of European talent, specifically in our case, European technical talent, and the caliber of early stage so-called risk on capital. That is a durable issue for Europe, and it's something that can be corrected in a multitude of different ways. But how we address it specifically within Fly is try to establish our funds such that we can properly capitalize at the day zero, first check, earliest stage, the founders that we're lucky enough to back, to allow them to get to something significant, and also position ourselves both from a network perspective and, in my case, geographically, to be the first and possibly last European check, or at least, lead investor. Yeah, obviously, it depends on the type of company we're talking about. In some businesses, you really need to be stateside. In some businesses, you must be stateside. That is the only market. And in some cases, you don't have to. But typically speaking, it's a good strategy to have a very kind of globalized view from the get-go.
And then just maybe a kind of follow-on question about the founders that you invest in, because obviously you're going early, you're in deep tech. What do you look for, and what trends have you seen in founders that are successful in making that transatlantic journey? Because I'm sure you've seen some succeed and some fail. What are the trends that you're actually seeing, and the patterns that you see in successful founders?
Yeah, I'd answer that in two ways. I think the first, and this is true kind of across the board, outside of a stateside capacity, there's a lot of different ways to sort of cut this, but internally we use this term like animal founder, and there's a couple different like sub archetypes, but generally speaking, it kind of symbolizes or articulates, a feeling you get when you speak to this individual, their drive, their grit, their hunger, the speed and depth of which they think and respond to questions, and et cetera, et cetera. Just really, you could call it hustler attitude, you could call it fierce nerd. Like there's a bunch of different aspects of it, but that is a really consistent attribute that we use as an evaluation criteria across the board. It's even more important, I should say, if you want to go stateside, because net, that type of behavior is more common in the US. So that's the first thing. I think the second thing, specifically to stateside, in my experience, the biggest lesson is founders don't go early enough. I think that's the big thing, which is slightly counterintuitive, or maybe is at odds with the conventional wisdom that I had heard even kind of in my earlier days of European tech, which would be, establish the market in your home country, get to a stable base, and then move. And that's sensible in a lot of ways. But I think that the market and the tech ecosystem at a global level has just matured and accelerated to the point where you can no longer take that staggered approach in most cases.
So you saying that the market has evolved, so therefore speed you think of net is now of essence in making that.
Companies are being formed faster than ever. More companies are being formed, but like by orders of magnitude. Even 5 years ago, there is more competition for attention. There is more competition for buyer wallets, for venture funding, for talent. You can see the growth rates of the soon to be unicorns or even like hot deals. Like it is markedly faster than it was a handful of years ago. Just the market has matured and become more competitive, and as a result, founders need to move faster.
No, I totally agree. Just like to go back to your point you made about the animal founder. I love that, because I think you speak to every VC and what they do is they have their own animal founder kind of reference. I just like to scratch a bit on that. And do you have any kind of metrics or measurement that allow you to know and score an animal founder, or is it more gut than kind of calculation?
There's no metrics. I'm sure if I thought about some quantification, I could come up with something, but it would be pardon my language, bullshit. It is a gut feeling. There are a series of attributes that animal founders tend to have. It's a semi-exhaustive list, and no one has all of them for sure. You can be extremely almost intense in your communication and like really, really engaged and have almost like a magnetic, magical quality. Other people are more calm and steady and collected, but you just know that they're thinking a mile a minute. So there's not one specific thing. But what I would say is, because we have a really small team, there's only 3 partners and the whole company is 6 people. So the team has been able to spend enough time together exploring this idea over, like at this point, probably thousands of founders. And so we have a shared understanding, a second language of sorts.
That's really cool. Yeah, because I'm a firm believer of, you can put the quant scores out there, but there is a gut feeling when you're sat across the table from somebody that has the passion, the knowledge, the drive, the desire, the IQ, the EQ. You're attracted to that individual. So totally agree with that.
Matt, talk to us a little bit about investment thesis, because you're doing first check-in. So you're probably regularly talking to founders or being approached by founders who haven't raised previously. And I think a lot of first-time founders think, oh, here's a venture capital firm. They invest in startups. I'm a startup who needs money. And they chase the wrong firms a lot of times. Just tell the audience who, if you're a founder out there, help them understand like what in the world investment thesis is, why it's important, and then how you think about that as a VC firm and a partner.
Yeah, good question. So we are a first check VC. So first and foremost, we focus on day 0, inception stage, pre-seed. Pretty much, if a team has raised anything beyond like a friends and family angel round, it's probably too late for us. We really do try to be that like initial catalyst check. So that's maybe one criteria. But more broadly, and if you look at our website, we have a phrase, something I should memorize this by now, but backing founders that other people want to meet but are afraid to or don't dare to invest, or something like that. I really wish I remembered it. My partner will yell at me for this. But the basic idea is stuff that is highly technical, clearly interesting, clearly ambitious, but there is a lot of risk there. And we tend to be quite high tech risk. In terms of like what we look for, we're very founder led. We don't have a hard thesis. We don't have formal thematic areas. We're not a fintech fund. We're not a crypto fund. We're not an AI fund. We are a fund built, and meant to back great, ambitious technical talent. But that does tend to gravitate into certain areas. And there are certain areas we don't do. We don't touch consumer. That is a very different build out. We don't really do marketplaces either. That is an interesting area, but that is a pretty spreadsheet based, very quantitative type of way to invest in, and we're more about the people. We don't do things that are outside of what is realistic for a pre-seed fund. While I think it would be extremely interesting to back a modular nuclear reactor, the reality is that's like a 25 million pre-seed investment just to get off the ground. We don't have the capital for that. What we do tend to do is a lot of developer tools, data stack, infrastructure. We do a lot of enterprise automation. We do a lot of industrial automation. And then we do deep tech or frontier tech, which is predominantly what I focus on. And that is a bit of a catch-all, but it's anything that would be kind of loosely described as really high tech risk, kind of unambiguously large market opportunity if it works. And sort of by definition, it's on the cutting edge of the frontier of what's possible. Our most well-known investment is undoubtedly Wave, the autonomous vehicle company based in London. We co-led that pre-seed in 2017. At the time, autonomous vehicles it still is extremely technically challenging, but at the time, that was really, really cutting edge. That's the type of stuff that we like to look at.
And how do you think about timeframes? If you're deep tech investing and it's a really long shot, it's a really hard technical problem, what are your timelines? Or what do you communicate to an LP? Like, this is going to be something one day. How do you think about all that?
We have a very so it's a good question. This is a little inside baseball for listeners, but a typical venture fund, and we fall into that very cleanly, it's usually a 10-year vehicle, 10-year window. Usually that has the ability, and it's pretty standard, especially at the pre-seed and seed stage. You extend that to another 2 years, and it's very common for funds that have great winners that are waiting for exits. Just to take an example, like I would imagine anyone that has SpaceX in their portfolio is probably just waiting that out. And so you could have a 15-year time frame. So we take a very long view. We do not think about when can we expect an exit. That is not in our mindset. It is not, frankly, it's not relevant for the stage that we invest in. More important is the market sufficiently large to really generate a massive opportunity that has both aggregate size as well as growth rate. And there's a little bit of a trade-off there depending on the situation. And then, of course, we have to also think about what is the follow-on appetite for this. To some extent, that's not to some extent, to a large extent, that gets back to Matt's earlier question around being in both geographies. And then, it's kind of incumbent on us to sort of be very well versed in where the general market is and where the technological frontier is, because what we want to be is sort of pre-consensus. You don't want to be too early. You don't want to be too late. You want to be kind of 6, 12, 18 months, a little early, and then everyone sees the potential, and then we're in the driver position, or our founders are, I should say.
Matt, so you find a deep tech company, you like the founder, you like the market space. How in the world do you approach technical due diligence? Like, how do you know if what the founder's telling you is even possible or may even work? That's a really tough challenge. How do you approach that?
It is a challenge. It is a challenge. It is something I have iterated on quite a bit over the past 6 years. So there's two main ways. First and foremost, the 90+% of the investment is predicated on the caliber of the founders, for sure. So we do spend as much time as possible trying to assess and get a feel for, are these individuals great? But that doesn't mean you don't do the technical due diligence, the market due diligence, as you said. So one way is you try to cultivate a broad and deep network of researchers, practitioners, people from the space. And so that does tend to gravitate a little bit into certain domains. I've spent a lot of time exploring and investing in robotics. I think I have a particularly strong network within the robotics space across the US and Europe. So I am both, I think, pretty well versed, but also I can diligence something pretty quickly because of that. But that's an investment in time. And then the second, also investment in time, is reading a lot and thinking a lot. And I have a newsletter where I try to share what I'm reading about, and then that creates conversations in very serendipitous ways. So broadly, I think I really believe in the prepared mind approach to investing to the extent that it makes sense for pre-seed. And then, of course, having a really strong expert network that you can call on to sort of supplement, because you can't know everything. And there's always going to be areas that I didn't plan on investing in this, but I love this team. And so I need to like figure out if this makes sense.
Well, one other question on the investment front. Just curious, if you're going after these pretty early stage companies, what are your best sources of deal flow? That is literally finding the needle in the haystack. How do you source those deals?
The best source is network. Always, it's the biggest channel for us across the board, across all three partners, and it by far has the best hit rate in terms of will we actually invest in this. I mean, network is a broad topic. That's, other investors, that's founders in our portfolio, founders that we may have passed on but really like, that's angel investors, that's random, as I said, those sort of due diligence experts or whatever that might know somebody. So you're constantly cultivating and nurturing that. But of course, you can't just, many investors do. I think it's extremely foolish to just wait till something hits your inbox or WhatsApp. You have to go to events, you have to hunt on LinkedIn, you have to kind of constantly be doing outbound as well. But for sure, the warm intro game is definitely the best game to play.
And just to follow up on that, because what I heard was you believe in the kind of prepared mind philosophy. You're always kind of obviously out there thinking about what is next. If you're doing that and offering kind of obviously a prepared mindset philosophy, how do you connect with people that are kind of, because you're going to want to invest in technology that meets where your kind of methodology is going. How do you find them?
I think, my approach is to try to put out a beacon of this is what I'm interested in. This is what I'm thinking about. And hopefully that in whatever way it takes form will connect me with someone. So as an example, I spent a lot of time, talking about drug delivery and thinking about that as an interesting area that can sort of fall nicely within this sort of tech bio sub-segment. Bio is a tricky place to invest for a number of reasons, but that was an area that I had spent time on. You speak to people, et cetera, that kind of gets out. And as maybe another investor, maybe a founder who meets someone who is working on this like interesting approach to, in a portfolio case, engineered capsids for gene therapies. And then so you should speak to Matt. I know he's speaking about this. And because I've thought about that, I can also have a richer, deeper conversation with founders than someone coming in cold. At least
that's really cool because you're kind of laying track with your newsletter, with your thought kind of process, pushing that out there in market, laying track for when the right connection does.
That's the hope. That all sounds extremely strategic. Like sometimes it doesn't work.
No, but for me it's like, damn, it's like, right, you got it together. It's more put together than other things that we've heard. So congratulations. I'd just like to take us to Scaling Stateside and just coming back to the kind of the transatlantic kind of pathways and, just speaking to our audience and, European founders, especially, I think, if they really are thinking about moving to the US in, about 12 months, what should they be thinking about now to prepare?
If they're thinking about moving to the US, interesting. There is just a bunch of There's a bunch of block and tackle that needs to get done. This isn't a particularly interesting answer, but it is true. I mean, you need to get your ducks in a row. If you need to have, are you going to are you going to do a U.S. flip? That takes time, especially depending on the country you're in. Do you have to deal with visa stuff? That is unfortunately becoming a little more challenging now. Do you have a network that you can pull on, or are you kind of cultivating that network from basically when you start? I mean, do you have customers there, or is that sort of a different approach entirely? So there is block and tackle stuff that needs to be done. There's also a bunch of you have to get your personal life set up right, and I think this actually does run founders into friction more times than not. I mean, embedded in your question, they are moving to the U.S. And so even in that, you are in that circumstance, like they're already far ahead of the game because they are moving, which means they have made a decision. If they're 20 something and they're on their own or something, it's obviously like relatively straightforward. If they're maybe older or they have children or a partner or ailing parents, or like life happens, like it is what it is. And so there is a bit of a dynamic that needs to be sorted there. And it is not uncommon for founders to have to really plan that out and to have conversations with their family and et cetera, because it's not nothing. But fundamentally, I think that's the big thing. And then there's a whole bunch of more specific things around how do you raise, and do you go do you go periodically, or do you go more strategically, shall we say? But yeah, if they're moving, I actually think they're kind of ahead of the game.
Yeah, and I can't agree with you more about that personal side of it. So from moving my whole family there for 10 years, that was something that, I didn't take lightly, but also I underestimated the impact on my family and therefore personal life. You're moving to a country that is foreign to you. There is no friend network. There is going to be no family. You're very isolated in a culture that seems familiar, but is not familiar. So I really do talk about, you've got to learn American. You've got to take the time to really understand how to do business in America. But it sounds the most stupid thing in the world to say, but learn American and really kind of embrace it and engage it. And, NCAA Final Four basketball is like, you've got to be learning the social nuances that go with it. It sounds so stupid, but it's true. You've got to treat it like, a UK individual moving to Germany or France. It's like embrace the culture, learn the language, understand the nuances. That will really help you and set you up. That's always been my kind of biggest guidance to people. So I think it really does kind of, layer on what you're saying. I guess my kind of, next question is about setting up the organization. So, people have kind of gone there. What we tend to believe in is that founders really should be kind of the first people on the ground. Do you agree with that? Do you have kind of any?
100%. 100%. I think they don't have to be the only people, and it doesn't have to be both founders. And in many cases, you have I sometimes call it like a split brain setup, where you might have usually the CEO, and the CTO will stay in whatever the home base is because there's a technical team, and it's like that's not uncommon, and that can work. There's challenges with having a multi-geo company, especially the early stage. I can speak to that on a personal level, but there's also advantages. But yeah, you absolutely have to have a founder lead that. There's no scenario where that, at least not at the stages that I typically invest. I can see, cases of later stage companies, like Wise. I forget when Andreessen invested now, but maybe that was like Series B or something. And so then perhaps you hire someone, or you've got someone who's been involved for a while, who sort of has the internal moral authority of sorts to be the GM. Fine, but that's not what we're really talking about today. So
yeah, because just to kind of layer on that, I'm sorry if I'm doing a lot of speaking, but we truly find that you've maybe got an element of product market fit, because I think we sometimes work with companies that are a little bit later stage than what you're investing with. So what they have is developed product market fit, maybe go to market fit in their in their local, country. And then what they want to be doing is creating product market fit, go-to-market fit in the US. And only the founder can translate that. Yeah. I don't believe there is an instance, especially in the enterprise, especially with the higher ACV, organizations, only the founder can go and do that and translate it back. And that is imperative, and that's founder-led sales, and we all know about that. But I think that is a chapter of the journey in scaling stateside that cannot be overlooked and cannot be kind of over prioritized in my humble opinion.
Yeah, I agree with that.
Matt, since you spend time in both ecosystems, both in the US and in Europe, can you compare and contrast that? What are the biggest differences between when you're being pitched in the US by a founder versus in the UK or Europe from a founder? What are the biggest differences you notice as a VC?
Yeah, I mean, it's a common question that can have a multitude of different answers. I sometimes think there's a oversimplification of just, European founders aren't ambitious, or European founders don't know how to pitch, or whatever. And I just don't agree with that at all. I think that there's exceptional talent throughout Europe, and in large part that is like our investment strategy. We're not looking to back the median founder, but with that said, I do think that there is, at a kind of implicit cultural level, a lot of times it comes down to Americans are better at sales, and they're maybe more, effusive or gregarious or what have you. And that, I think, changes quite a bit depending on if you're talking about one European country versus the other. What I do think is more generalizable is Americans, rightly or wrongly, are just more comfortable selling the future when there's nothing there. It's not lying. It's selling. It's not embellishing. It's just like saying where we're going to be. It's just, there's this aspect of, and this is something that I see a lot of times because I predominantly deal with engineers and scientists, as do my partners. So that's even like a higher degree of being kind of prevalent of just, I don't want to appear like I'm bullshitting. I don't want to say I have something when I don't. And Americans are just more comfortable with it. Just full stop.
Can I comment on that?
Yeah, please.
I raised 2 American daughters, and they were at school in kindergarten, and in kindergarten they were doing show and tell. And show and tell is why my pen is better than your pen. They are learning sales techniques at 5 years old. They are comfortable talking in front of people and sharing that dynamic and going into the detail and putting themselves forward. That does not happen in the UK schooling system. So I think it's part of the culture. It's part of, the can do, will do, the American dream kind of whole kind of philosophy. And I've seen it firsthand by schooling 2 kids over there. It's very different.
Well, Matt, how would you coach a technical founder who doesn't necessarily have that? They have a great product. They're a super hard worker. They kind of meet those sort of things, but they don't have that innate sales ability. They might be a very reserved European engineer. How do you coach them through that? Or because you want them to be themselves, you want them to be authentic, but you also want them to sell a bigger picture. How do you move the needle on that?
I mean, to some extent, part of the job is to figure out, there's a lot of great technical talent that has that, for sure. Maybe they haven't done it based on their LinkedIn profile and their roles, but they just have that implicit quality. And so that's always, that's a great thing to see. But part of the job is to figure out or get a sense of when people have the capability, but just haven't been tested. That's a big aspect. The sort of secondary thing is if they, maybe are a little less experienced and less developed in those core attributes, but they have the desire to. I very strongly believe in growth mindset, and really testing that is important as well. If someone doesn't think it's for them, that's just not me. It's not. That's a hard thing. You can't change if someone doesn't want to change. Of that, I violently believe. But assuming that it does have the components that I mentioned, we take a very concentrated approach to investing, especially for pre-seed, so that we can spend a lot of time with the founders that we're lucky enough to back. And so that there's, dozens of different exercises, and some of it I have kind of a built framework, and some of it is just like spending a lot of time and getting a feel for who the people are, and like, have you tried this? Have you tried that? Et cetera. But yeah, I spend a lot of time with the founders that I work with, and that's true of my partners as well. So, that has the benefit of, one, you get to know the person and what will and won't work for them. We take a very bespoke artisan approach to portfolio support. So, what works for me might not work for you, and what works for you might not work for somebody else, and blah, blah, blah. And then, and also kind of in that same vein, you build trust over time. So I've earned the right to sort of push you out of your comfort zone of sorts. That's not the kind of thing that someone just kind of coming in for just a hot take 30-minute meeting is going to probably be able to do. At least I don't think so.
And then how do you think about, because I think like preceding deep tech, there's so many questions we could talk about. But I guess what I'm sitting here thinking is, how in the world do you think about how to value that? Like, you're talking about something with a 10-year time horizon, probably pre-revenue. How do you think about that? How do you think about valuing that? And I always think traditionally a US VC equity based around, the dilution is going to be in the 20 to 30% range. Is that different for a pre-seed deep tech? Can you talk about valuation and equity percentages at that early stage kind of investment?
Yeah. So it's a good question. And if I gloss over anything that, requires more clarity, please let me know. But typically companies are broadly valued from an investor perspective. I have a model that I am trying to execute against, which typically breaks down into, what is my range of capital that I typically will provide in an initial check, and what is the ownership target that I'm trying to achieve. That's really the two drivers. Valuation is a output of those two things. So myself, Fly, and I think the vast majority of investors will not look at a company and say, this is worth 9 million post money, this is worth 18 million post money. They are looking at it more from, okay, the founder is raising X million. I can typically do 70% of that. I want to try to get this, let's say 10% ownership target. That math works. That's typically how it goes. Now, there are general levels. So for a pre-seed, you'll usually find at the lowest end, probably now is, I don't know, 6, 7, 8 million. And at the highest end, I shouldn't say the highest, because there's always crazy rounds of pre-seed that are, 200 million. But the normal thing is going to be somewhere between probably, let's say 5 and 25 post generally, which is a pretty significant range, but generally that's it. So if you see someone who's saying, yeah, we're raising a pre-seed at 60 million valuation, it's probably just like not realistic for the fund model. But I'm not viewing it as this doesn't check out at a valuation level, because what am I going to value the company on? And I used to explain this a lot when I was at my role at Entrepreneur First. If you learn valuation from a traditional finance perspective, it's discounted cash flows, it's competition in marks and comps, et cetera. There's a bunch of different dynamics. What are you going to do at pre-seed? There's no revenue. There's no product in most cases. There hopefully shouldn't be a ton of competitors. So it's more like valuing a piece of art, and it is in the eye of the beholder, and it is a market clearing price dynamic. On the opposite side, from a founder perspective, you have they have a goal of, we want to get to X. To get to X, we need Y amount of capital, and we don't want to dilute more than Z percent. I think that, just to sort of speak to your question, David, at pre-seed, it's more common to see somewhere between 10 and 20%, maybe 10 and 23%, than 20 to 30. I would say it's rare to see that amount. And probably it's becoming, even a little tighter for the more competitive rounds. Uh, but that's also just a factor of the market maturing as well.
Great. Matt, this has been some really great insights for founders. So thank you for making time to talk with us.
Sure.
If you're talking to a founder, you're talking to a deep tech founder in London, you really like, they're just starting on their journey, they're probably not ready for you. What advice would you give them? They're just getting started out. They have some great technical skills. They have a great idea. What should be their priorities? What advice would you give them at a macro?
You can't go wrong with the kind of conventional wisdom of really try to figure out what the problem that you want to solve is and kind of get obsessed with the problem. I think there's always exceptions to this, but generally technology and technologists looking to build something and then trying to find a problem to apply it to is typically not a great investment case, for sure. Spend some time thinking about who they want to build on their team. That doesn't necessarily mean co-founder. I think I am, and my team, my partners, are fine with solo founders. And frankly, a lot of founders overthink getting a co-founder and sort of rush into it. But a question I always ask is, assuming you had the round tomorrow, who would you reach out to either you've already reached out and you sort of have them warehoused in the hopper, or who would you reach out to as your first X employees, 5, 10, whatever? Sometimes it's one or two, sometimes they have a whole list. I think that's really interesting. It kind of immediately calibrates to like where they set their own talent bar. So I would say think about that. Yeah, I think that's, and then maybe the last thing is, there is a bit of a conflicting, there's conflicting feedback sometimes in the market of really focus on a narrow problem, kind of own that space, dominate that space, etc. And that is good. You don't want to be serving too broad of a thing because you usually struggle to find the finite pain point that is really going to drive adoption. But and getting back to the sort of stateside thing, if you're going to do that really narrow kind of, this is where we're starting, you have to have a broader vision of where it's going to go. And the reality is that vision of we're going to serve, this type of customer in this way, that is almost certainly wrong. Like there is just no way that you will be correct for a multitude of reasons. But it's really important to see that you've thought through that and that you kind of set that level. There is very few things that are more frustrating than having made an investment in a great market with a great product and the team is just not taking the opportunity. That is very, very painful as an investor. So like have a think about that as well. But, understand that like those things are not set in stone. There's nothing wrong with saying to an investor, I feel very confident in the next, let's say 6 months or 12 months. I'm really not sure past 24, but I think it's going to look like this. And that in between could go one of 5 ways. Like, I think that's an interesting conversation to have with a founder.
And then Matt, so what are your plans? Do you go at events? Do you source deals at events? That was something Matt and I were talking about. There's always great events. Should we go to those? Do you go to events?
I do go to events. I throw events. Smaller curated events. I recently did what I thought was a really great research day on robotics where I brought together maybe 60 technologists and researchers from across the UK for a 3-hour session. There were no investors. It was just sort of technical presentations from other people building in the space. So yeah, I do think that's helpful. But I would say broadly, my sourcing approach is kind of everything, everywhere, all at once. And so events is a component, but it is not the component.
Sorry, Matt, go ahead.
No, I was just saying, if people want to reach out to you and kind of get on your radar, how do they do that?
Yeah, so I try to be very open and at least I will read everything. I don't necessarily always get back when the kind of cold inbounds are terrible. But Matt@FlyVC is my email. You can find me on LinkedIn. You can find me on Twitter, but I'm not as active on that. I have a newsletter, which you can also find on my LinkedIn called Reshare. I, every so often, not as much as I should, write on my blog, which is mattwichrowski.com. And then, finding finding a warm intro is always a good strategy as well.
Matt, this has been really great. Thank you for making time to talk with us. These insights are super valuable for founders who are aspiring to raise in the U.S. We really appreciate it. And we hope to see you maybe in London at the same time. I guess we'll see if luck prevails.
I might be there next week. I'll find out tomorrow.
Matt, I'd love to buy you a coffee at some point. So yeah,
Sounds great.
let's connect.